Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering the new tax deal that's in the works and how it's tied to the Employee Retention Credit. For detailed information about the credit, attend Spidell's 1-hour ERC Voluntary Withdrawal Program webinar on February 7th. You can see a full list of topics covered and get registered at spidell.com under webinars. Last week, congressional tax leaders announced that they reached a deal that includes provisions regarding employee retention credit claims, long-awaited business tax relief, expansion of the refundable portion of the child tax credit, and expanded disaster relief, among other items. While this bipartisan agreement, known as the Tax Relief for American Families and Workers Act of 2024, is a big step forward, there still is no actual bill. The prospects for its passage seem good, but there are no guarantees, and current speculation is that it may take a while for the bill to pass, based on the possibility of it being tied to other bills that likely wouldn't pass immediately. Until we do know more, it may be advisable to plan to put your clients' returns on extension if they may be impacted by any of these proposed changes. One of the provisions in the American Families and Workers Act bars new employee retention credit claims after January 31st, 2024. While the bill has not yet passed and likely won't by the end of January, this appears to be a hard deadline because the entire bill is funded with up to $75 billion in anticipated revenues from ERC provisions. These include the cutoff for taking applications for the credit after January 2024, along with changes to and emphasis on the ERC-related penalties, including increased penalties against credit promoters and an extended statute of limitations related to ERC claims. So even if the bill passes after January 31st, new ERC claims could still be rejected if they're submitted after January 31st, 2024. New penalties that could be imposed under the American Families and Workers Act against ERC promoters who overinflate credit claims are equal to the greater of $200,000 or $10,000 in the case of a natural person, or 75% of the gross income derived by the ERC promoter from providing aid, assistance, or advice with respect to a return or claim for refund or a document relating to the return or claim. Additional due diligence requirements, along with a $1,000 per return noncompliance penalty and disclosure requirements, would also be imposed against ERC promoters. Contact your clients now to let them know that if they're planning on applying for the ERC, they should do it now. Again, even if the bill passes after January, it's likely that it will retroactively apply the January 31st, 2024 application cutoff date. Also talk to clients to review previously processed ERC claims to see if they should file for the IRS's new voluntary disclosure program. With the IRS placing emphasis on imposing penalties and extending the statute of limitations to audit ERC claims, it's likely that every claim will be audited. Taxpayers only have until March 22, 2024 to apply for the voluntary disclosure program. Taxpayers whose ERC claim has not been processed can withdraw their claim. Taxpayers whose claims have been processed and who received payments should use the voluntary disclosure program or file an amended return if they're ineligible for the program. Stay up to date with recent tax law changes at the upcoming session of Spidell's quarterly federal tax update webinar on February 7th. Get detailed on this subscription webinar series and register for a full year of updates or just a single session at spidell.com under webinars. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.